Stocks are trading soft after another down session in the US, but the advances and the declines seem to be in the balance. IT and healthcare are the big drags, while utilities and financials eke out gains. Starlink looks set for an India entry, with SpaceX tying up with Jio Platforms and Bharti Airtel to offer its broadband services via their distribution network, subject to regulatory approvals, of course. Analysts see little impact on existing services, expect Starlink to be used by customers in low or no network areas. IndusInd Bank CEO Sumant Katpalia says the accounting lapse is a one-off event while defending the timing of the disclosure. He promises that the bank will post a profit in the fourth quarter, though the interest income can take a hit. Donald Trump blows hot and cold on tariffs, with Canada rolling back duties on metal imports after doubling them. He also says that the stock market will do great, but he must press ahead on tariffs. Good afternoon, you're with us here on Halftime Report, live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Vatakia. With me as always is Mangalam Malu, and the little bit of resilience that we saw yesterday amidst the global market sell-off appears to be tapering off a little bit, and that is of course courtesy the IT names. What's holding out today is of course the Nifty Bank, which was the underperformer in yesterday's trading session, but at the lowest point of the day currently is the Nifty, 160 points down, now below the 22,350 mark. The Nifty Bank continuing to see some support at that 47,840 level, has also given up all the gains, but still holding on to the flat line as of now. Mangalam, good afternoon.
Good afternoon. So it's very interesting. Yesterday we expected, because of the global weakness, the IT index to underperform and the Nifty Bank to hold out because it is more domestic facing. However, the opposite happened. The IT index was impacted, or IT index was resilient, and the Nifty Bank was impacted by what took place in IndusInd Bank. Right now, as we speak, we have the IT index, which is playing out the global weakness that we've seen. There's also a domestic brokerage note that has come by. We'll speak about that on, downgrading IT. And today, IndusInd Bank, after a big drubbing yesterday, has recovered from the lows. Mind you, the stock is also in FNO ban, so that is exaggerating some of the moves that we're seeing on the counter. Yesterday's downtick of 27%, today's recovery of around 11% from the lows is supporting, the banking index in the way that it's not falling as much as the other frontline indices. But be that as it may, the Nifty is down about 150 points, led lower by the IT pack. The mid-cap index, that's been underperforming for 2 straight sessions. And after falling 1.5% today as well, and about 1.8% yesterday, we've seen a big decline in the mid-cap index from the highs that we saw all of last week as well. So nearly given up all the recovery that we saw in the last week for both the mid-cap and the small-cap index. Despite that, we have one of the stocks which is doing well, and this is from the frontline Nifty pack itself, up around 2%. Because of good commentary coming in from the management. The stock that we're talking about is Tata Motors. Sudarshan joins in with that. But just before we go to Sudarshan, we have the Feb MF data that has come in as well. 29,240 crores versus 39,000 crores in terms of an inflow. So the inflow month on month for February has reduced, though we'll look at more details out there. The net equity inflow perhaps could have been lower on account of a couple of factors. One, there might not have been as many offers openings, and secondly, there could have been some redemption. So we'll keep an eye out on further detail that comes in here. Feb MF data is what we have right now. Net equity inflow at 29,241 crores. Sudarshan, we'll look at this data in just a bit, but in the meanwhile, do tell us a little about Tata Motors. Okay, we'll get back to Sudarshan in just a bit, but that's the data that we have right now. February mutual fund data, 29,241 crores.
It'll be interesting to see what the SIP number comes out with, because even after the correction that we have seen from the highs, the SIP number has remained largely resilient. The large cap fund inflow still almost the same as it was in the previous month, around 2,800 crores compared to an inflow of 3,000 crores last month. Now, the consensus building up that large caps are the place to be as of now, and that is why you can see the flows on the large cap side still being fairly okay on a month-on-month basis, but the overall inflow number has seen a substantial downtick compared to the last month. Of course, there were a lesser number of NFOs, if you could attribute it to that, and of course, the market correction playing a big role in that as well. The small cap fund inflow at 3,700 crores compared to 5,700 crores last month, so a big downtick there of around 2,000 crores, and the mid-cap fund inflow too, seeing at least around about a 1,700 crore downtick from last month at around 3,400 crore rupees from 5,100 crores last month. We'll get more insights on this as the guests and experts join us on this. But as of now,
Sandeep Bagla with us. Sandeep, what explains this, difference in the numbers that we've seen? If you look at the last 4 months, the average has been close around 38,000 crores on a monthly basis. In February, it's come down to sub 30,000 crores. What do you think explains this? Is it the weakness that we saw in the market, the lack of new fund offers, or, is there anything else that you think has happened?
No, I completely agree with you. Your analysis is correct. So the flow has somewhat decreased in the new fund offerings. So anecdotally, what we were hearing that there has a considerable slowdown in terms of bulk money which is coming through the NFOs, and number of NFOs have also sort of reduced. So investors will be guided by the immediate past experience of the NFOs and of the markets. So it's quite natural that, while it is heartening to see that the inflows are quite strong, 30,000 crores is not a small number. So it is quite good to see that the numbers are quite strong, but the trend would weaken a little. So that is all right. I think what we need to focus is that the money flow is positive and it's quite substantial. And depending on the market and with the confidence coming back, I think we will see these numbers grow gradually.
One of the more volatile numbers is actually the liquid fund number, which has fallen from 91,000 crores to about 4,900 crores. My sense is that this 91,000 crores itself was an aberration, and as a result of which this 4,900 crores also is a bit of an aberration. So do you have any thoughts on this? The liquid fund inflow, which has come in just sub 5,000 crores versus 91,500 crores month on month?
Yes, so liquidity has been extremely tight on a couple of counts. So liquidity is, has been uniformly, consistently in the deficit to the extent of 1.5, 2 lakh crores. While the rate has been cut, the liquidity has not flowed into the system yet. And I think government is also, wants to keep the fiscal deficit down for the year and has been deferring payments. So I think in April, liquidity will improve. And that is when we will see, better numbers for liquid funds because local liquidity is tight, right?
All right. And what would your sense on the SIP number be? Because it's been holding closer to that $3 billion per month sort of mark over the last couple of months. But what's worrying is the increasing trend of withdrawals in SIPs as well. Where do you think that number settles this month at least?
So, I think the mutual fund industry and the distributors, the MFDs have done a fantastic job in terms of taking the message of mutual fund sahi hai to the masses. And people are putting recurring deposit kind of investments like SIPs, and that is really growing. I think these numbers will continue to grow on a trend basis. And I think few people who have started this habit in the recent times might experience some volatility and might get, second thoughts about it. But I think the distributors are doing a great job, and I think the mutual fund industry is doing a great job in terms of reassuring and re-emphasizing that we are here for the long run. So one should not get influenced by the short-term volatility. The markets are correcting from, extreme optimism scenarios to realistic scenarios. So I think there will be volatility, but I think we will tide over it. I think the numbers will settle down in the short run around these numbers and gradually grow going forward.
Right. Sandeep, the large cap fund inflow has remained pretty resilient so far, even on a month-on-month basis, but you can't say the same for the mid cap and the small cap fund. Do you see this now becoming a sustainable trend as there is some consensus building that, okay, large caps is the place to be and mid caps and small caps might just see some more pain going forward?
Yes, so what has happened is that, what we were initially, when we are investing in small caps and mid caps, we are giving more weightage to longer term growth. Now, those are not a clear and current reality that is in the future. I think the market mood has shifted that more money is getting allocated to current cash flows and current earnings. So yes, this trend is there, but one single swallow does not make a summer.
Right.
So I don't think this trend is going to last for very long. The current volatility has given rise to a situation where we are allocating more money to large caps, and this is happening across fund managers and investors and distributors. I think once the situation settles down, we will come, the flows in small caps and mid caps will start.
All right, Sandeep, just one last question before we let you go. You've been around for a while. You've been tracking this and you've seen markets through cycles. A lot of people say that flows keep markets resilient. The counterintuitive thought is that markets keep flows resilient because if the market continues to do well, flows keep coming in. It's been 6 months of underperformance of the market itself, negative returns for the frontline index itself, and a lot more for the mid and small cap indices. For how long do you think the market has to be this way for flows to actually, take a leg down or maybe not grow as fast as we've seen earlier itself? Just wanted your thoughts on how it goes.
I will answer that. See, people make the mistake of putting the cart before the horse. The horse has to lead the cart. The economy has to grow, because of which companies will do well, because of which earnings will do well, because of which flows will come. So flows are not coming because the growth aspect is slowing down. So once the growth and the visibility in earnings will come, and before they come, maybe probably markets will try to, to preclude, focus that possibility and build that earlier before the flows actually happen, before the earnings actually grow. So flows will come when valuations are a little better and earnings improve, when the visibility on earnings improve.
All right, Sandeep, thank you so much for sparing time and joining us today. Looking forward to chatting with you more often on this platform. Got some interesting insights coming in with the large cap flows being resilient, the mid cap and small cap flows seeing some outflow, and you can saw the sectoral and thematic funds number just flashing on your screen as well, lower on a month-on-month basis. We also being joined by Anand Vardarajan, who is the Chief Business Officer of Tata Asset Management. Anand, good afternoon. Thank you for joining in. What do you make of this, right? With these large, firstly on the total inflow, you attribute that to the correction in the market as well, and of course with the resilience in the large caps and the decline seen in the inflows by the small and mid cap funds.
So I think the way to think about this is 1 year returns of mid and small turned negative sometime in Jan-Feb, and that could have had a bearing on flows consequently in these categories. Large cap, for instance, I think turned negative. 1 year would have turned negative very recently. End of Feb, I think large caps would have turned negative. But I think there has been a lot of commentary which has been on, which has been saying that large caps on a relative basis look attractive. And not surprisingly, we've seen better inflows in large cap compared to its own past. But small and mid languishing relative to its past because of, I think, performance pressure.
All right, we take that point, Anand. We had a fair bit of discussion on this itself. Just a final word on SIP. What would you hazard that number would be as a guess? 26,000 is what we've been doing for the last 3 months. Do you think this is going to come down or maybe stick around at these levels itself?
My sense is that it could possibly kind of see a bit of softening in February. Let's wait for the numbers to be out. But if at all there is anything the same, I would attribute the same reason if it is any softer, because I think 1 year returns of SIP could look very, very soft to even potentially negative. So if investor sentiments could weigh in, then maybe that could seem a bit muted. Suffice to say that, of course, these are then times to kind of bump up or increase. But clearly, I think, if you were to look at the past returns, and investors often look at that as a decision point for making future investments. But I think we often keep saying this in our to our clients that as markets rise, it only your risk increases, and as markets fall, your risk decreases. This is something which is very simple but not easy to digest and action upon.
Right.
And that behavior comes across sometimes in flows.
All right, Anand, thank you so much for joining in.
And if you were to look at it in mid and small last year, I think
we've got him on a scratchy line, but we've got his point. Anand, thank you so much for joining in and giving us your views. We will obviously connect with a battery of experts once we get the SIP number that comes in as well, and more details as the Association of Mutual Fund Industry, the AMFI as we know it, will do a conference call with everyone and give us some more details of the flows that were in February. Take a short break, come back. On the other side, an important corporate conversation lined up for you. Management of Supreme Industries joins in to discuss the acquisition that they've made very recently. Welcome back. You're watching us here on Halftime Report. The company that we're going to talk to is Supreme Industries. It's signed a memorandum of understanding with Wavin Industries to acquire their Indian piping business for about $30 million. We have Mr. MP Taparia, who's the managing director at Supreme Industries, joins in to give us his perspective on that. Mr. Taparia, the first question is that, the reported revenue of this business is close to around 1,000 crores, of which you will be selling the tanks business to Vector's promoters itself. So on a net basis, what is the revenue run rate of this acquired company? What is the EBITDA and net loss?
Revenue expected when we operate the plant fully will be around 700 crore per year.
EBITDA and
700 crore presently they are running at loss, but we believe that with all the overhead expenses they have got, once we are able to sell 65-70% capacity, which we are confident with a network of distributor retailers what we have, we must attain 10% EBITDA for sure.
Mr. Taparia, good afternoon. Thank you for joining in. By when do you see this 65 to 70% capacity happening for this and the resultant profitability? If you could share a timeline, sir.
Normally, we are running already plastic piping business in several locations in the country, and we see that we achieve 65 to 70% capacity utilization every year. This is our past experience, so we are confident.
okay.
Actually, we were short of capacity, so we were going to put a plant in Madhya Pradesh. Now we have a ready-made plant running in Madhya Pradesh, and we wanted to enter into state of Rajasthan. We got a ready-made plant operating in Rajasthan. So we are quite happy with this acquisition.
Okay, so of the three facilities that you've acquired, of this company, there's one in Banmore, one in Hyderabad, and one in Nimrana. How much of it, how many plants are owned by the company, and how many where the land is actually leased?
One plant is owned completely by the company. 2 plants are on lease.
Okay, so then it means that you are just, paying for one plant and you are getting 700 crore revenue. So I'm just trying to understand with the kind of money that you've paid, it appears that it may be a lot more than you actually having set up your own plant. Would that be the correct assessment?
About 2 plants are on long-term lease. So that is because as if they borrowed money. They pay annually some 5 crore rupees annual lease rent. So we considered that it may be a value by 60 crore rupees. When we gave the value of $30 million, we counted that this is 60 crore rupees value for the 2 property which are on a rental basis.
Mr. Taparia, what is the net debt on the books of the company that you have acquired, and how much of that is likely to spill over into your book?
The company has got no debt. And
Okay.
we will be having outgo of around 350 crore rupees. Apart from the acquiring the asset, the net working capital and incidental expenses will be required to have a cash outflow of 350 crore.
Okay. I also wanted to understand if there is any more than just you acquiring the capacity. Will there be any sort of, brand? Did you acquire the company for the brand that they have, the distribution that they have? apart from just the manufacturing and the geographies that they are present in, is there any other rationale that you had in acquisition here?
The biggest rationale was that we have got access to their technology, exclusive basis, not only for India but also to export to SAARC countries. There is a huge need of having a better, by this tie-up, we will be able to provide excellent water management requirement of our country. This is going to be quite helpful technology tie-up. They got a plethora of technology in their arsenal, and they have given us access to all the technology for a 7-year period, which is a very great asset for our company going forward.
Okay, and in the MP plant, you also have the ability to expand the capacity. Are you planning to do that as well?
No, in this plant, definitely, as far as that we will plan. Once we take over the company in our hand from 1st July, we will definitely plan expansion there at Rajasthan and at Madhya Pradesh, both the locations.
Is there any capex that you have zeroed in upon for that, Mr. Taparia, or would you be taking a look at that once the entire acquisition is complete?
That we will discuss and give all detail once we take over the company in our portfolio.
Okay, and you will keep the brands Wavin and Vectis, right? Or will you let them die?
Now, whenever we are going to sell a product under their technology, we are permitted to mark goods manufactured under Wavin technology. Otherwise, whatever product they were making, in 6-month period, we will put Wavin brand, instead of Wavin brand, we'll put Supreme brand.
Okay, and do you have to pay anything for the technology share arrangement apart from the 350 crores that you've paid already?
We have got agreement for 7 years. We'll be paying technology based on the technology what to take from them.
How much?
Based on every year, we will decide based on the technology what we are acquiring from them. As I told earlier, it will be our exclusive basis.
One final question from my side, Mr. Taparia. The last time you spoke to us, you had cut your FY25 volume growth guidance from 14 to 12. Do you maintain that as of now?
I think this is our silent period. So how we operate this year, we will talk in the month of April.
But so far in the quarter, the trends that you've seen, will you be comfortable meeting that guidance, or there could be a chance that you may not meet that? Qualitatively, I'm not asking for absolute numbers. If qualitatively you can tell us how the quarter has been so far.
We believe the polymer price have come down very substantially. We also believe that now they have reached to their bottom level. This will enable the country to have a good growth next year.
And demand, how has demand been in the fourth quarter? Has it been any different from the third quarter?
With a lower price, definitely demand should be better.
So you expect that 12% will be met?
I will talk to you in April.
All right, Mr. Taparia, thank you so much for sparing time and joining us. Wish you good luck for the rest of the year.
Restriction from the company. I can't talk anything in the silent period. Sorry for that.
We understand.
We understand that. Thank you so much for sparing time and joining us today. Thank you so much. The management there of Supreme Industries on the latest acquisition and, of course, and how the demand trends have panned out in this quarter. We take a short break. On the other side, Apurva Seth of Samco Securities joins in with a quick chart check and some strategies as well. Stay tuned. We'll be right back.
Welcome back. The markets continue to slide and the Nifty is down 130 points. It's led by the Nifty IT, even as the banking index is holding mildly in the green. So if you look at all the three frontline indices, the IT index is the one which is dragged the overall markets. The Nifty bank is still holding mildly in the green, and that is limiting the losses that we're seeing on the Nifty itself. The broader markets are in poorer shape. So we have the mid-cap index down 1.5%, small cap index down almost by 1%, and we have the advanced decline chart telling you that the lines are at the widest distance that they've been from the start of this day itself. However, all is not lost. What we know is that there is supply at higher levels. That's why 22,500 call and 22,400 call writers are active. They believe that around 22,500 to 22,550, there could be some sort of supply that would come by. Those levels are far from where we are right now. But at the lower levels, 22,300 put is fairly active as well. And that's telling you that between 22,250 to 22,300 itself, which was incidentally yesterday's low too, there would be some support that would come by. A lot of long positions added on Kotak Mahindra Bank, and we are seeing a lot of short positions being added on Ramco Cements rather. And we'll keep an eye out on these stocks. With that, let's go across to Apurva Seth of Samco Securities as well, who joins in. Apurva, your thoughts on the markets and individual stocks quickly?
Good afternoon. Thank you for having me on the show. So we have a positive outlook on the markets for short to medium term. So the prime reasons behind that is that roughly 10% of the stocks are trading of CNX 500 stocks are trading above their 200 EMA. And the last time, in the last bottom, significant bottom which was made was in June 22 with a number of 20%. So we are currently way below this, and during COVID times, this number was down to 7.6. Now, apart from that, nearly 927 stocks hit a new 52-week low on 3rd of March. Now, this is also a big number after the COVID lows. And apart from that, the Nifty P, which is currently trading at 20, we have seen that in the past, whenever Nifty trades in the P bucket of 15 to 20, the average 1 year forward returns is roughly 17%. So all these things put together, we believe that over the short to medium term, there is good chance that we might bounce back to levels of 23,000 and then 24,000 in the next 1 or 2 months before we drift lower again. So that is on the view on the Nifty. And on the stocks front, we believe that HDFC Bank and Kotak Bank, these two stocks are likely to show resilience and are likely to head higher if we bounce back. So on HDFC Bank, our short-term target would be 1775 with a stop loss of 1670. The stock is trying to break out above the falling trend line drawn from the all-time highs, and there is also strong call and put writing seen around 1700 level. So that is likely to act as a good support. And on Kotak Bank, it is already trading very close to its all-time highs, just 10% below its all-time highs. So once the stock starts trading about 2000 levels, we will see good rallies coming in the stock as well. So I would recommend to buy 50% now and 50% later once it breaks about 2000. So the stop loss would be 1900 and target would be 2200.
All right, Apurva, thank you so much for sparing time and joining us with your views on the index and on specific stocks as well. Take a short break. Up next, we get you excerpts from the exclusive conversation with IndusInd Bank's MD and CEO, Sumant Katpalia. Stay tuned. Welcome back. The stock on the radar right now is IndusInd Bank, seeing some recovery after the drubbing that it saw yesterday. Mind you, of course, the stock is in the F&O ban, so no new positions there, still 4% higher. But we spoke to the management yesterday and they told us that although there could be some decline in the net interest income in the fourth quarter, the bank will show a profit. Let's listen in to some excerpts.
We found this anomaly around October, and that is where we started our internal assessment as well as we hired an external agency. At that point of time, we did not know the difference, and we knew that there were two deals getting accounted incorrectly, but there's so many deals in that, so we did not know the real impact. And I think as soon as we got to know the impact, we held a board meeting and we informed our board and we did the disclosure.
Okay. Now, is it, in your analyst call, you said that this practice of differential accounting by the ALM department and the Treasury is about 5 to 7 years. Then how come you got to know of it now? Is it that the amounts were very small in the initial years, but the amount you lost because of premature withdrawal of deposit was higher in 23-24, and so it became a larger number? Is that why you missed it in the earlier years?
No, No, not at all. I think it is spread over 7 to 8 years, like we said, and it came over a period of time. So there's no 1 year which will show the blip. I think it was evenly spread out over a period of time, as and when you do the premature withdrawal and the early termination of the deals created that impact.
And when did you appoint the external agency?
October 24th.
Okay, but you could have told the investors at that time you wouldn't appoint an external agency unless it was a somewhat sizable problem. You didn't know it was 1,000 crores or more than that.
The external agency was appointed, No, it was not, the number was not known. Lata, let me repeat it again. I think the external agency was appointed because we were not sure, and they were appointed for two specific purposes. Once, to understand the derivative accounting, and second, we are going into the new version of the treasury backend system, which is collapsed, to understand the processes and restate our processes to make sure that we are in compliance with everything.
Yeah, the general practice with at least the larger banks is to hedge their exposures with an external agency. Why wasn't IndusInd Bank doing this to begin with? And, specifically the September 2023 RBI circular does not deal with hedging per se. So we're still trying to understand, what led to the discovery of this change and the subsequent, despite appointing an external agency, delay in reporting this to exchanges and to investors at large.
No, Ritu, this was not a delay. We took a view that we should not be doing the internal deals and we should only go to the market hedge. And I think that is the call, and the circular clearly states that, and we changed the classification of our derivatives into what will go into hedge and what will go into mark to market. I think that's number one. Number two, in my opinion, there was no delay in reporting to the LODR. I think as soon as we discovered the number, the LODR. So as a process, we found that there may have been some gap, but very difficult to identify the gap. And as soon as we understood the gap, we immediately came into the LODR and reported the number. So if you think that we've hidden something, I don't think the bank had hidden any disclosure at this point of time.
Well, no, Mr. Katpalia, it's the markets that seem to believe there is a question when it comes to the credibility of the bank. And, I could recite several brokerage notes that talk about it, that, trust is very important for a bank. And because of this delayed disclosure, there is a lack of credibility, which is why you're seeing the kind of reaction we saw in the stock market, 20,000 crores of market cap wiped out in a day's trade. What will you say to these investors to allay their concerns that there will be no further shocks as well?
Ritu, I can only say that I think when the microfinance issue came in, it was really not an issue. And we actually, what happened. Post that, you've seen that we've been very transparent with our disclosures. I think as soon as we got to know this disclosure, we've come and disclosed it to the market. This is a one-off item. It's not a recurring item. And I think we should take it, we should get over it in this quarter. And after that, I think the bank should be back to the BAU, and you should see the growth that the bank is seeing and the profitability which the bank is used to.
Okay. What is the likely impact on NII and net profit in Q4 itself? Will Q4 be a loss but not the full year for sure?
The full year will not be a loss at all. And I think the quarter 4 itself also will be a profit. After taking this into account, if we have to. Because
Okay. Why do you say if we have to take into, I would assume you have to take it into account in Q4, right?
No, I'm just saying let the amount crystallize, ma'am. I'm still not aware of the full amount. I think it will be this amount. I'm 99.9% sure. I think we will absorb this loss in this quarter itself.
Okay. Can you give us some idea what will be your capital adequacy after you take into account this loss? What is it now and what might it fall to?
Will be above 15%. Will be above 15%. I can tell you we've gotten a relief on the MFI because the MFI we had taken at 125%. Now the MFI will work at 75% for business and for consumption purposes at 100%. So even if we take at 50%, we'll gain about 60 basis points on the MFI. So you take any calculation, we would still be above 15%.
Welcome back. The Nifty is down about 145 points, but as we speak, the number that we were awaiting at the start of the show itself is the SIP flows, which is coming at around 25,999 crores, just kissing that 26,000 crore mark. So it's the fourth consecutive month where the SIP flows have been stagnant around that 26,000 crores itself. Yes, it is a good number, but it's not growing at the pace at which it was growing 4 months ago. So 25 to 26,000 crores is where the SIP number is stable right now. What will be important is to see the number when it comes to SIP withdrawals as well. Withdrawals have been rising over the last 3 months or so. Inflows at around 26,000 crores. A mild decline month on month, but it has stayed stable around this 26,000 crore mark itself. And this coincides with the markets once again hitting the lows of today's trading session, especially in the broader market and the mid-cap index down about 821 points. What we'll do is take a short break on that note, come back, focus on all things commodities. Manisha Gupta will join in.
Welcome back. Joining us on the show now is Nitesh Jain. He's Managing Director at Purple Jewels. Nitesh, hi, thank you for joining in. And it's all about silver right now, because when you look at the last 24 hours, the best of the gains within commodities actually came in for silver. We've seen almost 3% of gains overnight at almost $33 an ounce and 98,500 on the screen in cents of silver. What is it really calculating at in the physical markets if somebody was to step out to buy silver?
Silver presently is doing well, and a lot of investors are all, looking at a great commodity as a investment. The reason being, a lot of it was earlier just domestic usage, but now in the new age, with all usage of it in the silver panel, solar panels and EVs coming into play, a lot of manufacturing happening in India, like Vari being one of the biggest solar panel manufacturers here. So green energy, all that, जहाँ पे silver का usage बहुत ज़्यादा हो गया है. So silver has,
Sure.
So, and if you see that, the ratio what used to be gold to silver is comparatively today at its quite low. It's around 88, 89. The comfort zone would be about 75 to 80. So it is the gold rally is also going to pull silver quite high now.
Oh, absolutely. And you put it on point that there is a lot of industrial demand coming in for silver. Nitish, also, how is silver selling in the physical markets right now? Because what we see on the screen is 98,000, but I'm assuming you will add GST to it and making charges, etc.
So yes, the bank rates are close to about ₹1 lakh. So, in the physical market, the retailer, like a jeweler, would charge 1 lakh, 2,000 rupees per kilo. And over that, the making charges and all that, if at all you're taking articles, and if it is jewelry, then the prices are much higher. And but if you see that silver today still, I feel is, quite affordable, and it's a nice price to enter into.
All right. So, Nitesh, I can comfortably, safely say that if somebody was to step out and buy silver, it's above ₹1 lakh a kg in the physical markets.
Yeah, definitely. The bank rates are above ₹1 lakh today.
Nitish, also, what are people really buying at these levels? I mean, we do understand that a lot of physical buying is happening. There's a lot of silver. ETF buying finally seems to be picking up in India. How have you seen on-ground buying in silver?
See, as an investment, people have always invested in gold and silver in India. And today, if you look at, as a comparison, see, people are today looking at an opportunity. Basically, the opportunity lies with the fact that gold prices are very high. This rally of gold is going to pull silver a little higher. So definitely, we see at 15 to 20% growth from here in silver prices. And that's why I think, people must be interested in buying silver. And they are buying actually in form of physical. We are seeing a lot of investors buying a lot of silver these days. Apart from the industrial usage, there's also a lot of investor buying happening there.
Nitesh, a lot of gold jewelry guys tell us that the gold jewelry buying is down by 30 to 50% given the high and volatile prices. Are you looking like that when you look at silver as a segment, or no, there hasn't been much impact?
No, see, people are not buying gold because they are buying silver, I feel.
Okay. And how much of silver imports have you seen? Because last year was good and 2023 actually was a record number. How are we
This
looking at
year
this
it's a bigger record. This year actually the silver imports have almost doubled. Not exactly doubled, but almost doubled.
Okay.
And again, the industrial usage is one of the major factors for it. And because a lot of make in India is happening and all that, so in EVs, in EV batteries, and silver being a component, which is good at conductivity, much better than copper. So the usage today, towards energy, silver is being used quite a lot.
So any sense of numbers on what have we seen for imports in the month of January or for this financial year until now?
January, February has been close to about 1,800 plus tons.
Okay.
So that's a huge number.
It is. And, this being a March ending as a month, has the buying slowed down a bit? Have you seen that creep in?
In domestically, yes, a little bit about, I would say in silver, definitely the sales has in the retail end has come down by almost 20-25%. But we have a good season ahead. We have Akshaya Tritiya coming up, and post that a lot of marriage season is there. So domestically, definitely we are seeing a lot of silver is going to be purchased.
All right, a lot of silver is going to be purchased. Up until now, Manisha was telling us that gold is only getting expensive, and now it appears that silver prices are rising, and now the demand for silver will take those prices higher as well. Manisha, what does one buy?
A lakh rupees a kg. I've been telling you that.
I'll just drink my glass of water and wrap up on this edition of Halftime Report while you take your business lunch and the market action forward with the next show.